Pre-approvals. What are they by definition? What are they meant to be used for? And what are they not meant to be used for?
Great question. I'd say, if I'm to simplify it, pre-approvals are essentially pre-qualifications or a look at the probability of one's purchasing power when ultimately financing their home. So when I say that, what I mean is you are assessing based on your income, face value, look at your income, look at your credit, look at your down payment. What is it that you can possibly afford? What is your actual maximum? And that tool is essentially what you take to then make your decision as far as finding a home in the market, whenever that may be. But maybe Neil, you can talk to the what is it used for, pros and cons.
Yeah, for sure. And just to jump back to your part and add something to it, I guess to simplify it even further, a pre-approval is a starting point. It's an illustration of the numbers so that you can visually see them and say, this is what I can afford. This is what my down payment is. This is what the lending criteria is. It's merely a starting point. So that's what I would define it as. What is it meant for? Well, I guess that was the gateway into the next point. So it's meant for understanding where you stand in terms of your purchasing power. It is meant to use to gauge where in the market you stand, the types of homes you can start looking at, entirely dependent on your affordability. If your affordability is 500,000, then you know you are limited to these types of homes and maybe these types of areas. And the pre-approval will likely tell you what your rate might be and how long it's being held for. And not that it's irrelevant. I think, a lot of people might get angry at me to say something like the rate is not important right now. But the more important thing is knowing where you stand in terms of affordability based on your income and your current debt.
Right. And, kind of segueing into what it's not supposed to be used for, what we recommend that you don't use it for is getting almost like an overconfidence in its determination of your actual approval. So what I mean to say by that is don't use it to then waive your condition of financing or to not include it just because you were pre-approved, because you have to remember, you may not realize, is that these banks, these institutions, underwriters, they don't have the time and resources to go do thorough reviews at this particular stage of the application process because they don't have a property that you're actually buying. They don't know the details of it. They don't know the type of home, the property taxes, the maintenance fees, if there are any, and things that influence the ultimate approval of that. In addition, they haven't done a deep dive into your credit. They haven't done a deep dive into your income. They might not have called your employer if you're in an employed type of situation. So these are things that have to be looked at some point. Unfortunately, they're just not looked at the stage of the pre-approval. So, if we're talking about what pre-approvals actually are, they're pre-qualifying tools to help buyers, find a home within a reasonable range, as opposed to, you blindly going out into the market trying to buy $1 million home when, truth is you're only going to afford 500,000. Anything you'd like to add to that?
I would just add that a pre-approval is not a promise. It is not a binding contract, and emphasis on the binding contract because that's actually a question I get asked a lot. We've had pre-approvals in the past not go through, and clients would come back and say, well, I was pre-approved for this. Well, yeah, you were, but your circumstances also changed. Maybe the credit dropped. Maybe there was a dramatic change in income, or maybe they went from being employed to now being self-employed, which is an entirely different criteria of approving applicants. But it's not a binding contract, and we put a lot of emphasis on that in the beginning, and that may not be the assurance you need in the moment, but the assurance that we're giving you is take this approval with a grain of salt, but use it to gauge where you stand in the market. It's not meant to be a promise. It's not saying that this is going to go through for sure. And I think that anybody you speak to that tells you otherwise is being dishonest with you.
Yeah, and I mean, if we're going to break it down into steps, I think this is how clients should kind of go about it. Or if you're looking for a home, do get pre-qualified, do get pre-approved, but in the way that we've defined it. Get an idea of what you can afford. Number two, go out, work with your realtor to find the home that is within those parameters. And when you find a home and you put an offer on, make sure you include a condition of financing. Now, usually we recommend at least 5 days, 5 business days to do so that we can then take that contract, complete the application, and submit it for the actual approval. This is the stage at which you will really get the confidence as far as your approval and its strength and what it is. And that's the 3-step process, I would say. Get pre-qualified, work with your realtor, find the right home, and then make sure to include the necessary condition of financing. And it just protects you at the end of the day. It's not like we're not confident that you won't get approved. If you follow our guidelines, we're helping you work towards that. But at the end of the day, that condition of financing is for your peace of mind.
And I guess to close this off, and it's not necessarily a debate, though I thought it would be when we started, and it seems like we agree on the pros and cons of pre-approvals. But at the very least, if I was to tell you a number of what your maximum affordability was and was to not provide you a pre-approval, that would help you achieve the exact same thing that a pre-approval would. And what a pre-approval does, and what I think a lot of applicants become too attached to, is the level of confidence it brings. But the confidence shouldn't be in what is written on that piece of paper. The confidence should be in, okay, yes, me telling you what your maximum affordability is, but the confidence should be in yourself and your job security and your ability to save and your ability to make payments on your debt obligations. That is where the confidence comes. So if I tell you that you can afford $500,000 and you are comfortable with what those mortgage payments look like, you're confident in your ability to continue making income, that is where your decision lies in whether or not you waive conditions of financing and go into houses firm, or decide to buy a little above or below that. You are then gauging based on your personal preference.
Right. And again, like anything else, everyone's situation is different. If you get a pre-approval at the beginning at a certain level of, purchasing power, things like property taxes being higher or lower can slightly influence whether or not you can, nudge that price higher or nudge it lower based on what you ultimately find. So give us a call, reach us, by text, email. You guys have our information. And yeah, we'll be happy to help you.